The broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, Ron here at Ablesys. Welcome to the webinar. Certainly been a wild, what, 2 weeks now about? It's just been crazy. So the intraday movement has just been insane. It's just simply not for everybody. That's really the best way to put it. It's been difficult because of the incredible fast movement, which is highly unusual. You only get like this, once every so many years. It's going to be like this. So it's been a little difficult because stop losses are further away. But then again, the more risk, the more reward. But nobody can control the market movement. I mean, there's been some fantastic trends if you've got the stomach to stick with it and be like a robot and just follow the Able trend rules. We know it works, and it's been working even in this ridiculous volatility the past week. But it's just really difficult to do because it's your emotions get into play, being that it's so highly unusual and the way the market has been moving just ultra fast. So after a nice little uptrend here, and I like this 120 daily chart to take a peek at of the S&P just to get an overview of the overall market because it's just been such an unusually wild week. So this has really been nailing the trends and the signals just nearly perfect, as you can see. We had a little uptrend there, but here's the nice part. You can see over here we had triple confirmation, and this was actually the first day that the market went down. The very first day, not the 10th day. That we're about the 10th day now, not including yesterday. 9 out of 10 days it's been down. But here's the nice part. The software picked up a triple confirmation sell signal on this swing trading chart right here. You got the red bar, you got the red dot, and you got the red X. So this is a 120 daily. This is a 2-hour and a daily combination. Good chart to take a look at when you got such a crazy, fast, volatile market like this. Just for the short-term moves. And we want to know, hey, what's it look like going out over the next couple days, a week or so, because it's just so wildly up and down, record-breaking type of volatility that really nobody's ever seen. The VIX was 40. I mean, that's just insane. You'll get that once a year, maybe once every few years. But the software picked up the entire down move because there's your triple confirmation sell signal. You've got a red bar, which is the 2-hour. You've got a red dot, which is the 2-hour. And it's red means downtrend. Red means it's going lower. And the red dots block or stop the prices from going higher because it's resistance. So the dots are resistance on the 2-hour chart, and the X's are the resistance on the daily chart. So we just simply wait for both to agree. And when they both agree, we've got a lot of odds in our favor. We like that a lot. And that's a buy signal right there, a sell signal, or buy puts. If you're an option trader, of course, that would be probably more popular in this kind of a market. Good stuff right there. And then, down it went. Now, you say, well, when do I get out? Well, actually, technically, we would have gotten out right here, closes above resistance. So, technically speaking, we were short the whole time. That's a really nice trade right there to keep everybody out of trouble during that crazy market. And certainly fine if you don't go short or trade puts. It would, at the very least, just kind of kept us out of trouble, or at least alerted us of what's coming. Now you say, what happened yesterday? Well, yesterday, see between this dash here and this here, this is all yesterday. Anything in between, these bars are yesterday, and this, of course, is today. So yesterday, even with that massive uptrend, we only had green bars, which is like, wow, that's unusual. That's pretty cool how the software picked that out. Because green means neutral. It wasn't even on a buy signal there. Green means neutral. The X's are support. So support came in on a daily chart, which is good because the market closed here today on red, but we can still go lower until we hit support before we're going to hit a roadblock, before it's going to stop. Now, is it going to go down that far? Nobody knows because Able trend is in a, what does Able trend say? Able trend's in a no trade zone at the moment. We've got red dots here. There's one underneath the latest bar. We've got a red dot there, and we've got a blue X there. So that would have been blue and X are opposites. That's a no trade zone. over the short term, over the next few days. The software is telling us we don't recommend trading at this time. Just we're in a classic no trade zone. What's so cool, I thought yesterday we didn't get a buy signal, which is a good thing because today was a down move. So if we had a buy signal yesterday, well, obviously we would have had a losing signal because we'd have been stopped out today. But we never had the buy signal yesterday. Here are the bars, they're all green. Once the 2-hour bar closes, it will never, ever change again. So there's no switching signals, there's no changing anything. I mean, anybody in the world could tell you what to do after the fact. I mean, ridiculous. Ridiculous that some people tell me, and I don't know that, being here 16 years and keeping so ultra busy every day, I don't even pay attention to anything else. But some people tell me there are other programs and indicators and systems that actually change after the bar closes. Now, when the bar is open, during these X's a daily, hey, it can, that can change. But once the day is over, it's final. On the 2-hour chart, once the 2 hours is over, it's final. On a 1 minute, 3 minute chart, which is what we like to use for day trading, after the 1 minute chart closes, it's final. After the 3 minutes is over, it's again final. It will never change again. That's important because anybody could switch signals after the fact. That's flat out cheating, if you ask me. So really, really good, that the swing, what we call our swing trade chart, the 2-hour daily combination nailed the entire move down in the past week. And now we're in a no trade zone. So if you're a swing trader, we're just saying don't do anything. It's too risky. It could just go either way. There's not enough odds in our favor one way or the other. When there's not enough odds one way or the other, we don't trade. So Ableton not only will tell you when to buy and when to sell, it's going to tell you when to do nothing. And, that's just as important. That's real important, actually. And that's the value you get with Ableton that you can't get anywhere else because it's our algorithms, that have a 20-year track record. So, they're not going to stop working today because you or I are using it. They will be losing trades and they'll be losing days. I can guarantee you that. But overall, it's extremely profitable, which is why everybody likes it and why you hear this long. So at today's open today, I mean, there's a triple confirmation, perfect textbook sell signal. But the bar, because we don't like to trade, we don't like to take on a lot of risk. Now, in this particular market, you're going to have to take on more risk. And we put the stop 1 point above the top of the red bar. So if you didn't take that bar, which I certainly wouldn't have because it was just like a 40-point bar, you take the next bar, which is a much shorter bar, and the stop loss goes 1 point above the top of the red bar. Still a very long bar, but more reward, more risk, more reward using Ableton because it's a very low risk system. But you can't do anything about the bars. I mean, there's just so much up and down movement within the 1 minute bar. You can't go lower than 1 minute. So the 1 minute bar is the only way to do it. Or if it's just too much risk for you, which I would certainly agree with somebody who would think that, and if you're not comfortable with that, then you just don't trade. It's as simple as that. Because you can't put stop losses closer than when Ableton says to. You're not going to compete with a 20-year algorithm that's just been just absolutely killing them, week after week, month after month, year after year. Again, they'll be losing trades and some occasional losing days, but not many at all losing weeks and never a losing month, ever. So that's the cool part about the software. So we can't change the rules because the volatility has changed. We just can't put stops closer than where would you put them? In the middle of the bar? Well, where? I don't know. We'd just be guessing then. We don't guess here at Ableton. We have to have concrete evidence before we make trades. And we have to have triple confirmation, not even double, which would be great. Some people would think that's great. Triple confirmation before we make a trade. So it's either more risk or no, just no trade at all. You just don't trade if you're not comfortable with that because we can't put a stop loss in the middle of a bar or just magically change the rules overnight that have been working for 20 years. So again, I perfectly understand if it's just too volatile not to trade. Totally get that, and I totally agree with that too. As it turns out, the software had a nice little move to the downside. And what we do is once the dots come lower than where our stop would be, which is right there, we then lag one higher row of dots above the price. So when the price is here, there's the red dot above it, and there's where we put the stop. Okay? I like to have the 3 minute, 9 minute in agreement in such a ridiculously high volume market, as well as the tick chart. I want to see everything in just total agreement. This, of course, was the big Fed announcement, so nobody's even going to think about touching it there. But we did have a sweet spot right in here where the tick chart agreed right there. So that worked out to about a break-even trade. It started to go up. It kept bouncing off of support, stopping at support. And we put those blue dots way before that even happened. That's the beauty of the indicator and support. And then we'd be out over here, which turned out to be about a very small one. I'm going to call that a break-even. Obvious no trade zone here. That's a losing trade, which would put the stop 1 point below the bottom of the blue bar, and we'd have been stopped out 2 bars later. Triple confirmation sell signal right in this area right here. And this was a, again, a lot of risk, initial risk because of the stops being a little further away. But for anybody who took that trade and couple trading in this highly unusual, high volatile market, the software nailed it perfect. Stop loss goes 1 point above the 2 green bars. When you're in profit and you get 2 green bars, green means sideways or neutral. We're then going to move that stop from there much closer to the 1 point above the top of the green bar. And we never got stopped out because we got a bonus. It kept on going lower. There's 2 more green bars. We'll put the stop right there. And we've been stopped out right there. Doesn't look like a tremendous move on the chart, but I've got to tell you, it was 80 points profit. Times $20 a point, that's a $1,600 move. Another suggestion you can do, instead of maybe trading in this highly volatile market, or because the stop losses are so far away, use the micro lots. 10 micros equals 1 standard lot, because 1 standard lot for the MQ is $20 per point. A micro is 1/10 of that. It's only $2 a point. So what a good thing, or what a good suggestion I think is to do, is to just trade, maybe 5, 4, whatever. That's up to you. We don't tell anybody what to do with their money. But the point is, trade the micros. If you traded 5 micros, now it's only $10 a point. You have less risk. So if the stop loss is 20 points away, which we don't normally like, but if it's only 10, but if you're trading the micros, let's say 5 micros, now that's only $10 a point, it's only $200 away, not $400 like it would be normally. So how do you get around this volatility? Either, like I mentioned before, either just stay aside, it's just not for you, totally understand that, or you trade the micros. Again, 5 micros is 10 points. 3 micros is only $6 a point. So if the stop loss is 20 or 25 points away, think about that. If it's only $6 a point, it's only $150 away, which is lower than our normal max in a normal market. So that's a I think a great suggestion what to do in this highly volatile market, because stop losses is so much further away. For the time being, until things settle down, the micros are a good suggestion. Very good. I think a very good compromise, because you're trading, your risk is dramatically down trading the micros. 1 micro is only $2 a point versus $10. So you won't make as much, because if you only had $10 a point instead of $20 a point, but the trends are so tremendous. I mean, we've got some 50 and 100 and 150 point trends. So even if it's a 100 point trend, the last one was 80 points. Let's say you had 5 micros and it was only $10 a point. You still made 800 in 30 minutes. A lot of money. So the micros are the way to do it in this extremely high market, because the stop loss is just they're further away than normal. Just understand them. Okay, Scott, my charts stopped working after hours with infinity. Well, you have to check, make sure they're on 24 hours, Scott. And I'm not a tech guy and not a very good one. That's not my expertise. Mine is in trading. So any trading questions, I'd be happy to answer, now during the market hours. But for any technical questions with charts or data or anything, you need to call tech support. The number's on the website, or you can email them at support@ablesys.com. Support@ablesys.com. So anybody with any technical questions or about charts or anything, because I've throughout this whole week of volatility, and I use e-signal data, not one problem. Didn't have a problem. It's working perfect. Yeah, Barry says also you can trade the tick charts. You're going to have a lot of ins and outs. It's going to be a tremendous amount of trades, but you can do that. Now, I think a real good suggestion are the micros. So David Scott, if you have any problems with your charts or anything, I'm the wrong person to ask for that. I'm your trading consultant, but support person, but not technical. And that's why we do have tech support here. Just send an email over to support@ablesys.com. And Eric is in tech support. He's here every day from 10 till 6 New York time, which is 7 to 3 Pacific time. So he's here 8 hours a day. Michael caught the 106 NASDAQ trade the whole way with 2 full standard lots. Oh my, Michael, you hit a home run, my friend. Great job. Stop 2 points above the second higher green bar. Yes, sir. I like not taking off the first lot at 5 or 10 because I need that big move with the 2 lots. Michael, great job, my friend. That's a tremendous winner. That's thousands of dollars. Great job. And of course, you can see another fantastic trend right here, triple confirmation. Look how Able Trend nailed this entire move down. Oh my, that's a big winning trade right there. That's just fantastic. Just looking at the trend in general, that was actually a close to, no, actually we don't get stopped. Let's say you did. If you had a stop out right here, you had a beautiful triple confirmation sweet spot right there. Your sweet spot entry is at 86.58, and you're stopped out over here at 85.73 for 80-point winner, $1,600 per contract. And if you were doing, say, let's say you're doing 5 micros instead of 1 standard lot, that's an $800 winner in 15 minutes with Ableton today. And another, of course, huge downtrend. Nothing but red dots. And if you red dots, the number 1 rule by now, you're in a downtrend. Stay short. You're safe. Yes, it's 1 monitor, Barbara. I only use 1. Barry, when entering, do you always place the stop above the bar, or do you use the red blue dots? Well, we always want to use the red blue dots, Barry, of course. But if that stop is, 40, 50 points away in this, insanely unusual volatile market, then we would use the top of the red bar when we're short, the bottom of the blue bar when we're long. And that would be the first triple confirmation bar when we're, when we're either long or short. Another triple confirmation winning trade here, up and away it went. We gave back some there because that's a triple confirmation sell signal and buy signal, and that was the end of the day. So if you are very strict, very robotic Ableton trader, it was just another huge winning day as it has been the past 2 weeks. However, very difficult to make these trades. You have to just trade the micros. That's the best suggestion we can make in an insanely unusual market. That's just the best thing you can do. Sandeep, I can do a live one-on-one trading session if you like. It's 15 minutes long, and you just tell me when you're available, and I can do it one-on-one with you as I've emailed to you, asking when you were free. So pretty cool stuff. The rules never change. Everything is the same. It's just a question of, having the having the discipline to make the trades. Skip, yeah, I mean, you can use the micros, and I would only suggest it in these incredibly volatile markets. Frank says you don't have to convince me. 800 is 8,000 in non-market. Well, Frank, you're a very disciplined and successful able trend trader who just puts his emotions aside, and that's right. Instead of making 8,000, 800, he'll make 8,000 because it's 10 times higher, and Frank's done extremely well. I'm real proud of you too, Frank. One last question from Jason. Are we better off not taking the trade if the bar is over? Again, that's what I've been talking about, Jason. If it's over 12 points, it's just up to you. Either you just not take the trade or you trade the micros. That's our suggestion, which is working either way. Michael Z got stopped out on the 1256. Was that wrong? You probably know it better than as good as that. Well, not better, but as good as I do by now, Michael. You're welcome, Jason. 1256 got stopped out. Oh yeah. Actually, that was the stop out because it went, clearly went above the 1 point above the red bar there. But there's your sweet spot, as I pointed out right there, Michael. Triple confirmation, tick chart agreed, 3-minute, 9-minute agreed. You literally had 5 charts all in agreement. It was going lower, and that was a great trade right there. And I discussed this one already. Here was the stop out right there at 75. We shorted it at 52. That was an 80-point winner, which is $1,600 for one standard contract. And that would be $160 per one micro. So yeah, sweet spot was a beauty right there. Good job, everyone. Thanks for being here. I hope I was helpful. Anything I can do for you, you know where I'm at. Call, email. I'm always glad to help. Hang in there and enjoy the ride. Have a good night.